Hello, hello, hello. Good morning. Happy Turnaround Tuesday. How is everyone doing today? Good morning, Patrick. Good morning, George. It's not a magic carpet, it's a rug pull. We need a lot bigger pullback than this for it to be a rug pull. Oh, is it the start of one? Well, maybe we'll find out and see. Afternoon, Charles. Good morning, Jacob. Good morning, options 22. Grand Rising, Christoph. Let's see. Today has been a breakthrough. I finally figured out the harmonic extensions. Well, there you go. Yeah, so you can put them together now. Retracements and extensions. Good job. Good morning, Dave. Let's see. There we go. Blew up yet another funded account, but the lesson was worth it. Well, I hope it was a very small funded account. Good morning, team. Newfound love for the 60-minute chart. All right. Don't just take it slow. Oh, Bed Bath & Beyond. That's funny. Oh boy. You can finally plan trades. Well, that's part of the battle. When you can start planning out stuff, that's part of the battle. Because then you can put together, doesn't have to unfold exactly the way you think, but at least you have levels you can take actions at. Good morning, Royal Palms. Bed Bath and Bankrupt is going to be. Why gag? Good morning. Let's see. Sterling putting in the news. Lots of pre-market trading lower, so there'll be some gap downs with earnings today. Let's see what else we have. We had Redbook. That I don't know why this hasn't updated. I've refreshed it multiple times. It's just not updating. But Redbook coming in, I think it was 4.6 versus previous of 5. Still not posted. 15 minutes after the open, pay attention to the services composite and manufacturing PMI flashes. They should all still be in contraction. But if something comes in either above 50 for some strange reason, the market could react to that. Or if you see something down 43, 42, we could get a reaction to that. Anything around this 45, 46, probably nothing. Richmond Fed coming out at 9, so 30 minutes after the open, and then all quiet for the rest of Turnaround Tuesday. You can see mixed market map, some profits being taken in community services. Verizon down after earnings. You had a bunch of earnings this morning. MMM down after earnings. GE after pullback. Raytheon Technology. Lockheed Martin was up. So that's one of the few that was up. UNP released this morning. They are down. So more down than up from earnings. You're going to have to see if that continues or if we get people running in to buy the dip on the pullback with earnings. You see your sectors, communication services, which has been on, you can see, so for the 1 week relative performance, 450 basis points today, pulled back 1. So just looks like so far some profit taking going into communication services. Not a big rollover play just yet. Still at 99%, 4 to 25 basis points, still in greed mode, even with this pullback. Trading, I think neutral gamma is 4,025. We're trading 4,016 right now, so we're virtually there. So any rally back above 40.25 takes it in positive gamma territory for dealer hedging, selling into the rally. Any sell-offs starts amplifying the gamma, but the gamma doesn't really, negative gamma really doesn't start getting substantial until you start getting below about 39.50. As I talked about, Verizon down, Johnson & Johnson, I looked at and now I forgot. Lockheed Martin was up. GE was down. Raytheon was down. 3M was down. Union Pacific was down. So I forgot what J&J was. Remember, after the close, though, Microsoft, that's a biggie. That's a biggie. So that could, and this is really kicking off. Microsoft is really starting to kick off the tech earnings. The tech earnings, which really come into play next week. So keep that in mind. Let's just check on. I just want to peek at Johnson & Johnson. It's bugging me now. All right, down. And I know they beat on earnings, but they missed on revenue. And down, down, down. So much more down than up so far. Bigger picture. Again, just trading to the prior breakout level. With this, even a pullback, I don't start watching even more substantially for something until 39.60 on a closing basis. Even slightly down, that's the technical from the harmonics level, but right below that we have the rotation zone. So even a pullback into there, just as a pullback after a strong Friday and Monday rally. But going to be watching to see right here if we get a bounce into the open. Key support, I'm paying attention to the 4-hour rotation zone because on a little bigger sell-off, we're into a clear path move. I am paying a close attention to this 39.98 to 4,000 if we pull back a little more into the open. So that's it. To the upside, no, that would not be a double bottom, but to the upside, the key resistance at this point is about 4,037, somewhere in there. Yes, you can use your shorter term. Now, you're going to want to update these if we push lower in the open, but I'd be paying a close attention to where this 62.5 lies. That's what I will be using. That's the key level. Before that, I will be using the little harmonics on the way back up. And yeah, you do have a little bit of a clear path move coming up in here on that 1 hour. NASDAQ. The NASDAQ, not even back to the breakout level. The NASDAQ could easily come back to 11,645. Yeah, will people take notice? I doubt it'll do that today in front of Microsoft earnings, but Microsoft missed. You could see us pull back there pretty quick. That's just their breakout zone. The breakout zone from the Friday breakout. So, and the 50% of this run up. So that's my longer term key level I'll be watching. Shorter term with this, I'm watching this 4-hour rotation zone. It is into the clear path on the 4-hour. And you can see even on the 1 hour, it's a clear path. On a 15-minute, it's a clear path. So there is not a lot of support here, especially right now trading below these little afternoon lows from yesterday. So that's my first resistance area is about 1860. If it starts getting above there and can hold those levels, like pull back and hold those levels, then I'll be really watching for about 1891 to 1900. Then above that would be 1942, and I will be putting on my retracement harmonics once I know we might have a low in for today. And on that pullback, I am watching on a slight bigger drop, 11,800 to about 11,814 for the first level of support. If it comes in with a stronger drop, I would be surprised, but got to be prepared. 11,750 is a very key level. The Dow, which we had the little double top trigger and yesterday afternoon and run down to the stop reduction. This did not take it out last night and now hitting the second target. And we got a nice little push. If it pushes down in the open, 33.5 is the final target area. All right, that Dow on any rally about 33,625 is the first little minor area. Then I will be using the retracement harmonics. The Russell, which is holding up pretty good. Major support area coming in about 1875 for me. Minor support is about, so I go 1875 to 1880 on the pullback would be my key area for the Russell. The clear path, the breakout of the clear path only takes you down to about this 1876 area. And I would be watching that 4-hour rotation zone on a rally back up. 1898 to 1900 is my first key area. Then about 1903, then 1911. Jumping over spiders and the Qs. Again, anything to the upside. Yesterday's close 463, 398.83. So, and 398, 399, which we talked about yesterday, was key resistance. We broke through it and we're trading just below that going in the open. If we regain 399, I will start watching for that return to 400 on the if market internals firm up into the open. When I'm talking market internals, focus on the tick first, and the 400 and 463, and then 402.40 area. To the downside again, if we really start, if we can't get back through about 399, if we can't get back through 399, then I'll paying close attention to about 397. 397 to about 396.30 as my major support area. You can see here's this 399 right here and here. You could go to even 3. There could be some minor support coming in about 398.60. But we start breaking below that. There's not a lot of support. You also see the clear path move to the downside. So again, keep that in mind. Should it get, if we start getting really poor tick and you don't get the buyers coming in the morning, just keep an eye on that with the Qs. The Qs, which took easily that potential double off the table right now on the snapback rally would be to, we're trading 287.14, 288.96. Key support 283.25. That's where key support is. Other than that, the only area is about 286.50. You see here. So I'm watching 286.50. Then let's go about 283.70 for the next. But you have, again, major clear path move that could get retraced if there's significant selling pressure coming in. On a little pop, the first area before the gap fill I'd be watching for key resistance is 288. It would have to get through that again before I'd start to even get minorly bullish, even with strong in market internals. The DAX, still, we could not get we're still getting rejected just above that 62.5. So that's the still key level I'm watching. But we start breaking down my major support areas between about 15,000 to about 14,965 for just today. And again, the key closing area is at 15,200, roughly 15,193. Nothing yet in the notes. Still keeping a close eye on this for a pattern to unfold, but nothing in the notes just yet. Dollar index still watching for a short-term bottom to be put in. Again, 101.95, so just go off 102s. We start holding above 102s, pull back and keep that as now support. I'll be watching for that run to about 102.70 to 102.80 over the next couple days. VIX is still nothing. And again, stops popping above 2050, I'll just glance at stuff because we could be getting a little more bearish movement, but that's about it. Crude still hovering at the trigger point from the double bottom. So far a sideways correction. So far a sideways correction. But the long-term doubles in play. Short-term double top is still a potential. However, the rotation zone's right in front of it. The key level, if we do break back down, now I'm watching, is right between the rotation zone at that 50, about 79.50 at the 50 EMA. Not much to talk about here, really. Just still watching for at least a short-term minor bottom in natty gas. Gold still watching for the top, trailing there. A little more pressure on the 10-year government bonds, but nothing yet close to that 50. So the potential double top on the 1 hour, if it really gets this next push higher, it will turn into a triple. Even you'll see it on the 4 hour. So I'm keeping an eye on it in the short term, but unless it really starts breaking down the next little bit, it's going to be off the table. So no resumption of a bearish play just yet. Euro, nothing. Pound, nothing. Little rollover here in the pound, but not triggering a bigger pattern yet. Bitcoin stalling out, still sideways correction. Tesla, which their earnings are on Wednesday, a slight gap down. What was I saw? That they're looking to announce a semi-factory in Nevada. Oh, more cash burn. But if that fills the gap, that's the first thing I'll be watching for, is the gap filled to the potential upside. If that fails, then there's not much support. If that fails, then I'm targeting back to, we have this gap fill from Friday to Monday. But the level I'll be watching in front of that is about 136.50. You see here, because that's also a clear path. And here's the breakout point to that. So is that a major shorting opportunity? Not yet. That's just a minor pullback. To the upside, still key level I talked about. Key levels that I'm still utilizing are about 140, 148 and 153.80. What else do we have? Let's see. I know Sterling's putting in a lot of news information. You're going to build your own strategic petroleum reserve? Let's see. Good morning, Donald. Good morning, Connor. Good morning, Martinez. Let's see. Where else did I miss? Who else did I miss? Let's get some of the good morning. All right. That's about it going into the open. So just watch for those market internals. You should know roughly the key levels like I watch for in the tick. So far, glancing back at the S&P, still trading in a key support area. So if this does hold, especially on a retest on the opening range, and we get a stronger tick, I'll start watching for that upside pressure. If this area breaks, it'll be a more continued pullback into a clear path move. Our LMT and Hershey, are they a buy here for Lockheed Martin? If you're going to play Lockheed Martin, it's holding the 200. It really has to get above 450 for me to be interested in a gap fill play with a short-term pop-up only. Why is this a short-term pop-up? You also, by the way, which I did not put on here.
I didn't get that.
Shush, Siri. Trading at the first level of the double and the 200. So I would not be aggressively buying this. There could be a little pop play back into a gap fill, but that's only a rotation zone for a potential back down. That does not even invalidate the double. I would personally not be, unless you're looking for a super aggressive plays and you're very nimble, it's not a long-term buy. It could be a short-term pop, but you start breaking below this 200 and the first target from the double, we should easily see 431 and then possibly 421, and that takes us between the 50 and the 62.5, which is a key reversal area. So no, I'd be waiting unless you're super nimble. And I hate fighting a trend. The trend is now, the uptrend is broken. You've triggered a topping pattern. So the current trend is down. Find easier plays than going against the current. On Hershey, don't like the setup. It's done some technical damage here. Earnings coming out. I have no idea what they're going to do so next Thursday. But again, unless you're trying to do a quick bottom fish and keeping a very tight stop, don't like it. Easier things to find to play. Why? You've broken. Look at this. On a closing basis, multiple times now you've broken key daily support, popped into the rotation zone, rolled back over. Even if you get a higher pop, you're into the rotation zone and you got the hooking over 200. So again, that would be a super aggressive trying to eke out a little to the upside. Also, you closed below the 50 week. And last week closed below a major support area. So those, again, not the kind of things that I'm trying to grab bottoms in. And on this last little run up, you're below the 62.5. So we could easily retest. Even if it popped with earnings, I'd watch for another rollover. You could easily retest these lows from June. Look, and even from a fundamental standpoint, I mean, it doesn't have your P/E's high, doesn't have a great dividend yield yet. You know, dividend starts getting better down here a little, but this thing could easily pull back longer term. So there you go. It all depends on your time frame. But I want to talk to everybody. Have a good day. Remind me, Lyft, but learn to trade with something in the short term, not this broken key resistance. Check out Lyft for potential pullback after gapping up this morning. I would be actually watching for more of a topping play going into earnings with Lyft. Bad gap and close at 200. So if it stalls out that 200 in a prior resistance area, we can see at least a possible rollover play going into earnings on the 9th. Interesting. Thank you. Have a great trading day, everyone. I shall see you after the close. Thank you for being here. Bye for now.